What's up, guys? It's Rob here, and we have to talk about Lucid stock, ticker symbol LCID, because this stock is dropping again today, right? Off of some more news that just came out, and it's not the kind of news that you would expect. So let's take a look at the chart and see what's going on. We can see that Lucid is down about 5% on the day. We were at around $20 when the market opened, and now we're at $18.95. So we have been dropping quite a bit on this news. Now, it's not actually the typical news that you would expect from a stock. Nothing that bad happened fundamentally, but it's actually another stock event. And I know I made a video about a stock event that happened a little bit ago, a couple days ago, and this is just another stock event that Lucid's throwing at us. So let's take a look at what happened. We can see Lucid is forcing a cashless redemption of their public warrants. Now, a lot of people don't know what public warrants are. That is essentially very similar to an option, right? An option is a contract that you have with someone where you can buy 100 shares of a stock and pay a certain price for it. A warrant is very similar, except it's a deal with the company where you can pay a certain price to the company and buy a certain amount of stock for that price. Now, what they have decided to do, they've decided to go with a cashless redemption. So this is actually good news, right? Because beforehand, we were assuming that they would just have a cash-based redemption, which actually leads to more dilution. And dilution is when there are more shares available for public trading in the public float. So what happened with this is a long time ago, during 2020, I believe, Lucid investors had the opportunity to buy Lucid warrants where they could pay $11.50, and at some point in the future, over the next 5 years, I think, they could get one share of stock. Now, Lucid is actually forcing this redemption. It has to happen by October 8th now, so that is actually when you can expect some of the volatility with Lucid to end. But what they're doing instead of this $11.50 for one share of stock deal, which is actually great for current Lucid shareholders because this would have resulted in quite a bit more stock being released than what they're actually doing. They've decided to go a cashless route. Now, this means that instead of paying the $11.50, forget about that, investors don't pay that, and they don't get one share of stock. They just get 0.4458 shares of stock per warrant that they have, and they don't pay cash. So that is kind of a fair trade, right? They don't have to pay the $11.50, but they get less shares, and that contributes less to the available public float. So there are actually less shares of stock available. My guess is Lucid's doing this because they currently have plenty of cash. They don't need the cash. If they were cash strapped, then they would probably have gone along the route of actually just taking the $11.50, which is gone now, and and giving away the shares of stock, and that would have actually led to much more dilution than it is going to currently. So what this means, I've actually done some math here. There were about 40 million warrants available, and those warrants are now going to equate to 0.5 shares of stock per warrant. So that actually means 20 million more shares over the course, starting now, going to October 8th, will be released. So 20 million more shares are going to be released, and this actually isn't that big of a deal because if you look at how many shares Lucid has in the public float already, it's already 520 million. And this 20 million shares in addition, right, this is rough math because, I didn't have time to do the complex math. It only equates to about 3.8% more share count. So if you actually look at the drop that we experienced today of 4.7%, it's a little bit overzealous, I think. I think that it's a bit of an overreaction to this news because the actual dilution that we're going to experience is only about 3.8%. And, we saw it in the past when we had dilution. The stock also dropped much more than it was actually being diluted before quickly returning to these prior levels that it was really meant to go to, around $18, right? Because we had a 10% about dilution in the stock price, and we dropped from 20 and then consolidated around 18. Now, I think that we're probably experiencing a bit more of a drop than we should. However, there is some increased volatility with Lucid, so perhaps this is just normal trading activity, especially after this whole dilution and run-up. Maybe people are getting antsy about it, so who really knows with that. But I don't expect that we'll be breaking below the $18 support level that we had previously formed. I think that we'll probably continue trading in the $18 to $22 range for quite a while, probably, until some good news comes out for Lucid, breaks us out of that into the range that we were trading in prior to this initial pipe with shareholder distribution, right? That's what the last video I made was about, and that's what led to the initial drop in Lucid price. So I do expect that we'll probably continue trading in 18 to 22, and I actually did a little bit of a day trade on Lucid yesterday. I might be looking to take a trade on it today if we get the right price action, right? If I see that we're experiencing strong upward pressure, which it looks like we might be starting to, we very well could be at the beginning of a small upwards trend because this news really isn't that bad, right? This is actually really good news because the warrants people knew about for a long time. People knew the warrants were out there. They always knew that the shares were going to be diluted at some point. And this is actually less dilution than was expected because Lucid is going the cashless route. So I think this is overall really good news for Lucid stock and probably shouldn't be resulting in that big of a crash. If anything, it should honestly, in my opinion, be resulting in a little bit of a bump to the stock price because it shows what a strong position Lucid is in. They don't need the cash and they don't want to dilute the shareholders. So they have probably pretty good ethics towards their shareholders, right? They aren't trying to screw them out of their share count and dilute the shares more than is necessary. They're trying to keep the shares as limited as possible and improve the stock price, which is really what that company is there to do, what all companies are there to do. So that's what I have for you guys today. Thank you for watching. If you enjoyed the video, feel free to like, comment, and subscribe. I would really appreciate it. And other than that, I'll see you in the next one. Have a great day.